Hello, and thank you for joining us for this week's MacDesk Flow Report. The MAC stands for Market Access Center. I'm Rebecca Darst, coming to you direct from the floor of the New York Stock Exchange. We're up 92 points in the Dow right now. That's just over 10 S&P points, and we've been higher throughout the morning. Remember now, much of Asia has been closed this week due to the Golden Week holiday, which has crimped some volumes a bit. European shares closed in mixed territory after both the ECB and the Bank of England left their benchmark lending rates unchanged. ECB President Mario Draghi did his bit of jawboning in the post-meeting press conference in Slovenia today, saying the ECB is ready to start buying bonds as soon as member countries meet the necessary conditions. Though this is nothing new from Draghi. Remember, conditionality has been a major sticking point for peripheral countries considering aid requests. We saw yields on Spanish and Italian bonds rising today, although the euro-yen currency cross, which is often used as a barometer for risk appetite in the broader European complex, rose for a sixth straight day. Speaking of conditions, we had comments out from the IMF in the early pre-market, a spokesman for the fund saying the IMF needs to see two key conditions met from Greece, namely debt sustainability and financing assurances before its loan to Greece will be dispersed. Back on U.S. shores, weekly jobless claims for last week came in at 367,000 versus street consensus around 370, with the 4-week moving average on jobless claims stuck in the middle of its year-to-date range. Now, there's been a lot of chatter on the implications of last night's presidential candidate debate. For the most part, the strength this morning has been in higher beta names, with some strength in financial issues and volatility in healthcare stocks. Obviously, there's a lot of speculation as to whether the price action in hospital stocks versus HMOs is some kind of proxy for election outcome expectations. To that end, we'll just say that the option activity we've been seeing in the sector has been very short-term, limited for the most part to the October contract, which expires well before the election, so very nimble action there. We've also had September comp sales out today from a number of retailers. So far, the results have been mixed, with nearly half of reporting companies missing street estimates, with drugstore and department store retailers laggards within the group. Overall, September retail sales were up 0.8% month over month. The street was looking for a gain of 1.7%. Now, without the drugstore segment, this would have come in a little better than consensus. Apparel retailers were a pocket of strength in this report, however, with general and specialty apparel beating the street, along with most discounters. Looking at the end of the week, we are heading into a big September employment report due out tomorrow. A number of desks on the street are looking for a weak number. To that end, we've been seeing a bump higher in put buying interest in SPY weekly options that expire at the end of the day tomorrow. SPY is trading at $146 in the underlying. Put buyers are targeting 146 and 147 strike puts, and we're seeing some selling interest in the 146 calls. That's definitely a number to watch. For all the market insights, check the inbox for the midday tomorrow. For now, that's it from me, Rebecca Darst, for the New York Stock Exchange MacDesk Flow Report.